Let's zoom in. The 10-year yield is kind of whipping around today. You can see it was down, it was up. It's basically flat on the day. Looking at the S&P 500, let's flip over to the 10-minute chart. The S&P 500 here was trading very nicely to the upside and has started to come in just a bit. But be aware, take a look at this. This is where the S&P closed yesterday, and this is where it currently is. So you're still looking at overall an S&P that is looking to open higher on the day. All right, so again, we're looking at the S&P possibly continuing its relative strength even in an overbought scenario. Now let's go to the daily chart of the S&P 500 here, because what we've seen is a meteoric run to the upside. Take a look at that move here. Now again, there is room for it to go a little bit higher before it hits what I would refer to as a key downsloping trend line. Let's take a look at where that trend line comes from. Zoom all the way out. You have to go all the way back to the all-time highs right up here. So if we go to the all-time high here, we connect it through the highest point in recent history. That gives us this level right over here. Now, if I look at my chart, that level is around 455 on the SPY. So that to me looks like the normal obvious target price that the S&P or the spiders should go to. Now, having said that, I do want to make you guys aware, anytime you have a ton of gaps, be very careful. So in other words, it would not shock me to see some retrace action, or maybe we touch 455 and then see a big pullback, because one of the things that you could see here, look at all the gaps that have formed here, all right, here. All of these are huge gaps in here in the chart. And one of the things that as a technical trader I've learned is that gaps are made to be filled. All right. In other words, the market wants to draw it back. This is abnormal. This is almost like there's a step missing in the chart. And it wants to come back and fill that in, fill that hole in, if you will, on a technical basis before it can continue potentially higher. So it just does leave that opening when you get so many gaps along the way that at some point, maybe we go here first, but at some point it's got to check back to fill this gap. Some point it's got to check back to fill this. Some point check back to fill these on the chart. Again, to fill those holes back in, put a step in that spot. Okay, so again, we know our max upside on the spiders is about $5 higher. That could be where we're headed over the next couple days. We'll watch and see what the S&P does today. But overall, it's still a warning sign here for a back test of some of these levels. Now, I do have some big charts to show you guys today, but before we do that, I do want to go over the QQQ. The Qs are into some resistance here. Now, I want to show you this. So basically, this is what we would refer to as a double top. Double top, simply, it is exactly what it sounds like. It's a high, then we pulled back, and now we're revisiting a high. Essentially, it's a double topping point right from here to here. All right, now we did pull back a couple days off of that level. Let's see, is this the beginning of the back test of some of these gaps? Because we have a gap here, we have a gap here, we have a gap here. We have gaps all the way back down. I think in the very least, the NASDAQ needs to come back and fill this area in right in here. Now, part of my reasoning for this is that the market on the technology side, what we've seen in the NASDAQ, in the Magnificent Seven, and maybe, again, you want to take out Tesla. Tesla hasn't performed that well. But if you look at Meta, if you look at Apple, Microsoft, NVIDIA, even Google and Amazon, they have been tremendous, adding $1.5 to $2 trillion in value in just the last 3 weeks. Okay, so again, they are overbought. If they start to just stall out a little bit, it's going to breed a pullback in the NASDAQ 100. I want to show you this chart here, guys. So this is your chart of Meta. I'm a huge fan of parallels. And what we could see here is a parallel that actually what you do here is you basically take the lowest point on the chart and you connect it through two secondary points here. Take a trend line and draw it right through. Super simple. Connect the dots. Then use your parallel tool in TradeStation, or TradingView, excuse me, and bring that line up. And what you could see here is that when you bring it up, it connects right through this area right here, right through here, right through the lows right in there. It might be hard for you to see. And then it also connects through this high. And notice how yesterday on the big surge on Microsoft, we actually touched that line again. Now, again, can we go through parallel lines? Yes, and you would then raise your parallel to this level to find the next target price. But right now, you have to respect that on the move. The other thing to keep an eye on is this trend line as well. Same starting point. And by the way, this starting point down here is the low from the COVID collapse, right? So you're taking a major pivot low, connect it through this high here, which connects through this high, and we also get that high pivot. So again, I want to be clear. This doesn't tell me that 100% Microsoft's going to pull back here. What it does is it tells me that Microsoft has gone up a significant amount, right? It's a big move up. I mean, like we're talking hundreds of billions of dollar move up, and therefore it's probably tired. You just ran a marathon. Microsoft ran a marathon. It's getting a little tired, and it's slamming into walls. So again, all trend lines are of resistance are walls in front of you. Now, if there's one wall here, can I run my hardest and break through it? Yes. But what about after a marathon? When I'm exhausted, can I still break through? And that's what a resistance point becomes. It's how far, how exhausted is the move going into that level. Then you add in multiple doors. The doorway would be this trend line. Here's another doorway, this trend line, and you add in multiple doors. Now say, okay, so I just ran a marathon, and I'm exhausted, I'm tired, I'm hungry. Now I have door 1 and door 2. Can I get through? And this is where probability comes in. Some of us, we probably could. Some of us, big, strong, young. And then there's others of us that are tired, a little bit older, maybe not as strong, and we're not going to be able to get through. So the question is, does Microsoft have enough energy? Is it big enough? Is it strong enough to get through these multiple levels? So when we talk probabilities, that's exactly what I'm talking about here. How strong still is Microsoft after such a dramatic move to get through 2 doors in front of it of resistance? Okay, and again, I think that's a great explanation, understanding resistance. It doesn't mean you can't get through it. It means, again, the probabilities are shifting to lack of energy to push through. Okay, the last thing I want to do here with you guys is kind of a cool thing here. I just want to show you that oftentimes the biggest moves come at the end of cycles. So if we go back to the previous all-time high in 2021 here on Microsoft, so we're basically looking at this move here, right? So again, this move all the way to this move. That was the final move up, and it was huge on Microsoft, right? So the final move up there, and then that was the top, and we've seen Microsoft come down significantly from there. Now, if we look and say, okay, well, what was the percentage of that move? And this is something you can also use. It's looking at end of moves, the energy behind it. So what I like to do is I like to take a measurement right here, right? And basically that was a 24% move up in a straight line before it topped out. And so what I like to do then is say, okay, well, if we go over here to this move, what percentage is that? Is it getting close to the same extension move or the same dollar move? And right now we're at about a 22% move to the upside. Now, one of the interesting things, take a look at this, guys. Okay, so this move was 24%. So far, we're at 22%. But what about dollars? You want to see something crazy? Check this out. And again, this might be a little bit far for you guys to see, but I'm going to write it in freaking big letters because this stuff, I love it. I literally get off on this stuff, guys. All right, so this move, $68.59. That was the move here. Do you know what move this one is right here? Even though percentage-wise it's less? $68.59. Boom. So again, be clear. My job is to find factors that tell me something is getting close or at the end of a run. It doesn't guarantee success. It never does. Trading isn't like that. I am still humbled on a daily basis by the markets. But the key is doing your research, finding things that kind of all align, and then saying, okay, yes, it may not be 100%, but can I get probabilities at 70% that we're going to see a pullback in Microsoft? Maybe. Okay. If it's 70, 75%, now we're talking about if I only took 70 or 75% winners over and over and over again, I win 7 to 7.5 times out of every 10, 75 times out of every 100, 750 out of 1,000, the dollars begin to add up. And that's the key, guys. It's not about hitting a home run, right? This is the game plan. I should have a bat right here and be able to go boom, right? That's not what it's about. You want to be a singles and doubles hitter, all right? I don't hit home runs. Do you know the last time I had a 100% winner in my portfolio? Probably like 10 years ago. Now, for those of you in crypto, you're like, oh my God, this guy sucks, right? This is ridiculous. But the answer is that my normals are winning 75% of the time or better, and I like to just basically make 10 to 20% per trade in a couple weeks or a month. And I just continue to repeat. Every 100 trades, every 500 trades, every 1,000 trades, 10 to 20% winner over the course of a 10 days, 2 months, whatever it may be, and I just rinse and repeat over and over and over again. That is the key. Basically, I want to go to the Hall of Fame in trading by being a singles and doubles hitter. Wade Boggs, Tony Gwynn, all of these, not flashy. I don't need to be flashy. I don't need the Ferraris. I don't need the Lambos. I don't need to show you guys zillion-dollar watches all over like all these fake kind of people do, right? That's not what it's about. It's the market humbling me enough to know that don't be a cowboy. Singles and doubles will make you a millionaire. It's just how simple it is. And obviously, it's about learning the charts. I do want to just go over this chart here. This is AMAT. AMAT getting crushed today on earnings. Look at this drop. And by the way, remember Cisco yesterday? Remember Palo Alto Networks getting crushed? So again, a little bit of a disconnect in this market. A lot of stocks, a lot of big tech stocks, like AMAT's a big company. Cisco's a big company. Cisco's like $200 billion plus. This one isn't far off. These stocks are warning. Their earnings are not good. And again, they're getting punished. We saw Cisco Systems yesterday get punished. The stock here is at 144, down from a closing basis yesterday of around 155. But overall, are the markets going down? No, because the markets are in this euphoric stage of saying, okay, the Fed is probably done. Hopefully they can lower interest rates. Inflation's coming down. It's a Goldilocks scenario. Everything's perfect right now. And that's what the markets are going with, and they're ignoring this. Eventually, and this is how markets work, you get kind of in this euphoric stage in the short term where you're like this. Eventually, cooler heads and logic prevail, and eventually you do come in and kind of, this does ultimately down the line have an impact, because eventually people start to say, okay, what's the PE ratios? What are the fundamentals? What are this? Oh, wait, this isn't really that good. Sometimes it takes like a full moon or something to happen for people to kind of get back to that place, but it does happen. All right, in tune with this, let's take a look at some levels. So let's see what we got here. So if we look at where this is trading, right, it's right around 143, 144. I don't really see much in that range. There is, in all fairness, there's one level that's a high-risk level right here, around 142 to 142.50. It's a gap fill. I'm probably going to stay away from that level. Maybe that's a mistake, but I'm going to play it more cautious. I analyze my risk versus reward. Now, what I do like, though, is if this continued to sell off today, we have an upsloping trend line going all the way back here, right? From all the way down here, through here, and that coexists right below 136, basically at 135. There's also a gap fill right here at that same level. So for me, if this got close to 135, it now becomes an interesting risk-reward play on the chart of AMAT for a long. All right, so again, that will be the level that I'm probably looking for, whether it hits today or the next couple days, who knows, but that will be the technical level to watch.